Hey, good morning, everybody. I'm a couple minutes early. Finish your coffee, hang out, do what you do. Good morning, Luciano. Good morning, Gary. How's everyone doing today? Man, market's been moving, hasn't it? I like it. You like the elevator music? I can't hear it on my end. John Novak posted that picture, though. If elevator music is not your thing, you can turn off the music down here. I don't even get the option to hear it, which frankly upsets me a little bit. Good morning, Sophia. Good morning, Alex. Gary, I guess you've already turned it off. So you're good. I love it. John Novak stealing my thunder this morning, telling you guys about news. That's what we're doing every morning, right? First thing we do, check news, make sure that we're not trading into something that could go crazy, a freight train of emotion, if you will. I do this every day, guys. I go to forexfactory.com. Honest to goodness, I have a routine every day that I wake up. I turn on my computer and I go through this rigmarole right here. The first thing I do is I go through my NinjaTrader 8 stability. And I can tell you guys that the first time you do it, you're like, ugh, this is a lot. The second time you do it, you're like, well, that's not so hard. By the third time you do it, guys, this is literally a 3-minute endeavor to get you where you need to be to help that NinjaTrader 8 run a little more stable. One of the biggest challenges with NinjaTrader 8, guys, is just it's a workhorse. It gets in there and it works hard and it chugs. The better your computer, the better it runs, without a doubt. I always like to share this link too. If you are in the market, guys, these nice folks at Easy Trading Computers have worked with John to build a package that runs next-gen stuff, insanely efficient. This is the laptop version. They do have a desktop version. I need to get the link for that. And then they've even got it to where you can build it with extra monitors, all the good stuff going across. My old eyes don't care for 15-inch monitors. I'm a 32-inch kind of guy. But guys, this is there for you. So every morning I go through, I get things stable. Once everything is stable, ready to go, charts are opening, and I'm coming to forexfactory.com. I'm looking for news, and there's quite a bit today, right? We had some at 8:15, moved the market a little bit, made things jump, dance, hop, all those good things. Today is Wednesday, May 3rd. At 9:45 a.m., we have low impact version of the final services PMI. And then at 10 a.m., we get that high impact version. High impact can make the market do all sorts of craziness. So, thanks for that, Rain. So guys, there's your desktop version, and I'm going to bookmark this one. I appreciate that. We will just bookmark this tab. Cool, so now I've got both. I appreciate that. Guys, they build the desktop too. Same price, not everybody needs to travel. I am full-blown gypsy these days, so I like the compactness of a laptop. Of course, a gaming laptop almost feels as heavy as a desktop. Um, Wednesday, May 3rd, guys, 10 a.m., high impacts can create some craziness in the market. At 2 p.m., there's an FOMC statement. Guys, if you've ever watched FOMC Day, it's kooky crazy. That thing will zing, sometimes 10, 15 minutes. So just be aware. Know that there's news coming. I don't trade the news. I don't go, oh my gosh, it is the ADP non-farm employment change. This is going to affect my day trading. How? It doesn't. It doesn't force me to make decisions other than go get a cup of coffee. Stay out of the way of the emotional reaction. And then, guys, we're going to build a foundation each and every day. The first hour of this classroom is designed 100% for my new people. It's designed for those of you that are brand new to Nexgen, you guys that are coming in on demos, you guys that are just really exploring, going, hey, is day trading for me? I saw a movie with Tom Cruise and it looked too hard, or But it's not. Simplicity is the key. It's the order for the day. Um, and when we talk about that simplicity, my first hour is dedicated to keeping it simple, guys. And I'm going to show you a quick something. I'm going to share something with you. Your step-by-step path to becoming a confident trader ASAP. It's a two-part process. It is posting in the room, posting your pictures in the room, posting your trades in the room, posting your questions in the room. Guys, I don't care. Post your thoughts, hopes, and aspirations in the room, but I want you to get in the habit of having a conversation with me each and every day. Even if it's one thing every day. Hey, Mark, let's talk about momentum. Hey, Mark, let's talk about this. Do it. This is your classroom. And every time you ask a question, it's like getting a private session, guys, because I'm going to focus on your question. I'm going to lead you to where the answers are. I'm going to provide you the answers, and I'm going to make sure that you have clarity when you need clarity. And this capture software, guys, this is your key. It's one click of a red button. This should have been loaded on your computer when you loaded the software. If not, super easy. I'm going to click a camera button, guys, and all you have to do is vandalize a chart. Use shapes, use arrows. Change colors if you want. That's cool. I don't mind. You can highlight stuff if you feel like that's what you need to do. But the most important tool that you have is this call out button. And this is where you and I are going to have a conversation. You're going to post a picture and ask a question. You're going to post a picture and tell me why you did what you did. You're going to get this picture into the classroom so that we can have a conversation about anything and everything that you've done, what you're doing, what you're thinking, how you're feeling. And what this does is it allows me to hold you accountable for your rules. It allows me to say, hey, Ron, you told me that you were waiting for odds favorable momentum, but we don't seem to have it here. Or the flip side is it may say, hey, Ron, I noticed you took the same trade you've taken every day for the last 6 months, and you tend to be successful once again through consistency and following your rules. Hey, good job. And it'll be like putting that picture up on grandma's refrigerator where we can all beam and see it. But you have to use this capture image preview, guys. You have to take these steps. You can upload it to Screencast. And this is putting that picture up into a cloud. It provides you a link. All you have to do is copy it, swing on over to that classroom, into that chat box, and post it in there, right? And now we can have a conversation about what you see. The other way to do it, guys, if you just want to keep it simple, hit the copy button. Once you hit the copy button, you can post that picture in the room as well. And then you're done. The next thing that you need to do is use your spreadsheet, guys. And once again, we've provided you a spreadsheet, someplace where you can track anything and everything that you do. And there's a new version on the website. I absolutely love it. This spreadsheet is your trade journal, and even the CME suggests that you have a trade journal. And this front page is taking that same screencast link that you put in the room and putting it into your spreadsheet. What kind of trade was it? How did you feel? What were the conditions? And what was the outcome? And if you do this every day, you're going to begin to recognize patterns in the market that are bringing you success, that are consistent, that are profitable. And you're also going to recognize patterns in yourself, patterns maybe that are bringing you success, and also, typically for the new user, patterns that maybe aren't contributing to you being a good rules follower. And I'm going to recognize those patterns. You're going to recognize those patterns. And we're going to have a conversation about it each and every day and get you on the path to success. The next page of the spreadsheet is where you're going to take a picture of anything and everything that you do that fits the rules. And it's so imperative that it fits the rules. These are your favorite looks. These are your personal trade setup looks. You're going to steal them from class. You're going to steal them from the Discord room. You're going to grab them from the manual, and you're going to use your own through study. But what happens is when you begin to fill this up, and guys, you've got 160 examples already in there. If you take the time to click on each of these, to look at the conditions, to look at the entries, you're going to become confident. You're going to practice. You're going to study historically. and you're going to gain a confidence in the market that's going to put you in a great spot. So taking pictures, use the sheet. Guys, we're going to learn the trigger line of Fibonacci rules for when it's okay to trade. That's the first hour of class. That's the first thing we do. We're going to cover each and every one of these rules, make sure that you have an understanding of them. It's only 3, and it only happens on 2 charts. You're going to simulate your trades daily. You're not going to be afraid because you don't feel like you don't know enough. Guys, get in there and break everything that you can break, but the key is post it in the room, and let's talk about what you're doing. You're going to simplify. I'm going to help you simplify. We're going to focus on nothing but entries for the first 20 days. From those entries, you're going to learn to manage the trade, and then from that simple entry and that basic management, you're going to expand and develop a trading plan that suits your needs, suits your tolerances. You have to learn the Fibonacci looks so that they become easy. And guys, here's one of the biggest ones right here. Don't practice the wrong trades. Focus on being a rules follower. You can go back and retrade the day. When the day is over, use that market replay, get some practice in. I did it yesterday. I did a whole day yesterday. Had a great time. Took me about an hour. I'm going to take pictures of the correct trades. Guys, you're going to fill up that spreadsheet. You're going to fill up your screencast account with trades, and you're going to repeat this process every day until you take the correct trades. Notice that it doesn't say until you win all the time, until you're 100% profitable. It's until you take the correct trades, because the correct trades have been proven through your study, through my study, through Nexgen's diligence over the last 20 years to win more than they lose. And if you are always taking the correct trades, well, then you should be guaranteeing yourself that you can win money live. And then one more thing on that note, when it's time to go live, guys, everybody wants to put their college tuition up, right? Everybody wants to put their kids' inheritance into the market. This is kind of a realization for new users. I want you to accept that if you're brand new to something, you may not be as good as you think you are. We all feel entitled to win. I felt entitled to win after my first 30 days, but you have to trade well to win. So before risking your capital, guys, when it's time to test that plan, when it's time to put that plan into action, use one of those trading prop firms such as Apex. You can control $1 million worth of money, $20,000, $50,000 accounts, and that's approximately, right now it's about $300 a month to control $1 million in capital. They're going to let you keep the first 25,000. They're going to give you 90% after that. And what you're doing is you're testing your plan live without the risk of blowing out an account. And I can tell you that the number one thing, John and I were talking about this morning, the number one thing that takes people out of trading is catastrophic losses, because they think that they're ready and they're not. They thought they had a great plan, but they didn't practice it well enough. Guys, look into one of these trading funds or firms, and if you look at our page, there's 3 or 4 of them in there, right? So you can use that prop firm. Get in there. And the cool thing is, where on earth did that go? Here we go. Is starting out, use somebody else's money. OPM, right? Other people's money. And you'll thank us later when you realize what you didn't know. Everybody has a pucker factor going live. It just happens. And the actual harm comes from thinking you're a better trader than you are, blowing out a large sum of your capital. Guys, you can avoid that pitfall 100%. Stay in the game. All you have to do is trade somebody else's money. So this is my how do we get to where we want to be, right? We're going to study what it takes to get there. We're going to study how we get there. And initially, we're going to keep everything simple. We're going to focus on, sorry, I'm all over the place. We're going to focus on, for this first hour, a high probability trade. High probability trend trade, guys. This is defined as when each indicator, every chart, agrees for the rules of a trade. And typically, this is when all their triggers are the strongest. This is going to be when there's nothing in the way. Your entries come from the area where the market is likely to continue, and there's nothing between that entry and your profit target. Guys, your first 20 days is focused on entries for the high probability trend trade. From that high probability trend trade, you will grow, everybody does, into what we call a medium probability trade. And this is where one small issue exists. You're going to have to manage it a little more assertively. You're going to get to break even a little bit quicker. You may take profits a little bit faster. But what you learn from the high probability trend trade is going to teach you to read your charts. That's my goal for your first 20 days, is to teach you to read these indicators, to recognize these rules so that they become easy for you. Because chart reading is 90% of what you do. 90% of the day, you're going to be staring at these indicators and discerning whether or not you have advantages. You're going to be able to understand where the market is likely to continue through your chart reading and use that point for an entry. Where the market is likely to go, this is going to help you develop a management plan that makes sense. And then where the market is likely to stop, where the trend is likely to end. And since we're looking for a high probability trend trade, this information where the market is likely to stop will not only keep you from trading into trouble, but it's going to behave as an anchor for that highest probability trend trade, because these trend trades that happen after a termination condition, one of those areas are likely to stop on the 13.2. Guys, this is the trade that typically wins 70 to 80% of the time when you're following the rules and embracing the advantages that the rules provide. It's only 3 rules. Sounds simple, right? You need momentum, you need a clear path, and you need an entry area. Guys, that's the formula for a trade. Each one of your 3 rules provides that advantage. And that advantage comes about on only 2 charts. Simplicity, right? The KISS method. Everything starts on the 13.2. The 13.2 leads the way. The 13.2 is the chart that's going to give you the general temperature of the market. It's like a broad stroke of a brush. And this is just an overall look. If the background on your 13.2 is green, guys, we're in an uptrend. You should only be looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend, and you should only be looking for rules to be met for high probability trend trades short. I can tell you this is your first advantage, and it's not even listed in the rules. Trading with the trend alleviates quite a few of your problems. Rule number 1 happens on the 13.2, strong triggers, providing you the advantage of momentum. Rule number 2 happens on the 13.2, that broad stroke of a brush, making sure that there's no termination conditions, no areas likely to stop the market. And guys, when the rules are met on the 13.2, and honestly only when the rules are met on the 13.2, you're going to turn your attention to a smaller, faster chart. This is your 5-1 chart. And the 5-1 chart is nothing more than a refinement tool. You're going to take that 1 bar on the 13.2 and you're going to whittle it down. I like to say whittle. You're going to whittle it down to 15 or 30 bars that are taking place in that 1 bar. And guys, this is where you're going to use a limit order to buy or sell a pullback. You're going to rely on this smaller chart to get you back to the area where the market is likely to continue. And that's how you're going to enter the market, by using a limit order right there at those areas, right inside the triggers. And by doing so, it's going to allow you to reduce your risk, which is a wonderful thing. But even more so, it's going to allow you to maximize your profit potential. So without further ado, guys, we are going to focus on 2 charts, 3 rules, and 3 very clear advantages that are the recipe for a trade. And everything starts with strong triggers on the 13.2 chart, guys. And strong triggers defined right here in this picture. When your small triggers separate from your large triggers, both are wide, both are up, angled in the direction of the trend. It's the space between the two, between the small and the large. Your small are the solid line, the faster moving. Your large are slower moving, they're dashed. This space right here lets me know that the odds are favorable for the market to continue up. In a downtrend, small's below the large are wide, they're angled in the direction of the trend, guys. Agreement in color, agreement in direction, and the space between the two lets me know that the odds are favorable for the market to continue down. So when they're wide, this is the most favorable look, looking for a pullback on that smaller chart to get you into the market. And you're going to hear in class every day, odds favorable momentum. You're going to see on so many charts in here, OFM. We don't have to type that much, right? 3 little letters. Odds favorable momentum, OFM, means that the odds are favorable for the market to continue in the direction of the trend. And guys, this advantage doesn't happen from start to finish all day long. You'll go from odds favorable momentum, and those small trigger lines will break inside of the large, weakening the large triggers. We call this an anything can happen look, because anything can happen up or down. Anything can happen looks typically happen right before a reversal. And the reversal provides odds favorable momentum. Guys, these tails on the 13.2, these wicks are potential entries on the 5.1 when you have that odds favorable momentum. Once again, anything can happen. There's a reversal in the market, provides odds favorable momentum, and down it goes. And then you get indecision when both the large and the small don't agree. Maybe the trend is up, but the large are down. It's this indecision. It's your opportunity to sit on your hands and wait for a clear-cut path. Wait for that odds favorable momentum to come back, guys. So I'm going to give you this picture as well. Odds favorable momentum is probably the easiest thing that you're going to recognize as a brand new user. And if you commit to just being patient, if you commit to waiting for that look, it's going to provide that advantage of momentum, guys. And once again, there's those tails, there's those wicks that are potential entries on the 5.1 with the odds favorable momentum. Is everybody cool with that? I know I have some new people in here. Marshall, good morning. I love that you keep coming back. Who else is brand new in here? I'm checking names. Checking them twice, guys. If there's anything I can do for you, you're brand new, raise your hand. But odds favorable momentum leads the way, right? And then once we have odds favorable momentum, we have to have that advantage of a clear path. Rule number 2 gives us that advantage. Termination conditions false. Room to the profit targets true, guys. Not trading into an area likely to stop the market. So when we talk about termination conditions and we're looking at these areas likely to stop the market, we should start with the areas, right? Areas that may reverse the market, areas that might create a bounce or a reaction that could create a loser in a trend trade that could reverse it on you. Divergence highs, it's a magenta line that prints from a pivot when the market is losing momentum. Red Fibonacci resistance, yellow 1-to-1 dots, blue Fibonacci support, or one of these divergence lows, the cyan line that prints from a pivot when the market is losing momentum. These are the areas that may reverse the market. And guys, it's the most simple process of determining whether or not they are going to hold, whether or not they're likely to stop. And it's just a comparison of your T3 trigger lines, the same trigger lines that give you momentum. You're going to compare those trigger lines to the area. But the first thing that has to happen is price reaches an area, guys. The comparison takes place after price reaches an area. So these price bars come down and they hit support. At the time of that impact, your only job is to look at the trigger lines and say to yourself, have they broken the area? And if they have not, no more short trades, guys. Don't trade into this area. It may reverse the market. I embrace the word may, likely to, has the potential to, because nothing in life is guaranteed, guys, and these areas will break, but not always. So we give ourselves the advantage of a clear path by allowing the trigger lines to get to the other side of an area. And let me pull up my picture for you. This one I call, is it broken? Price reaches resistance in this case. Absolutely none of the trigger lines have broken through. There is no clear path because this 69.80 area is not broken. Guys, this is rule number 2 not met. Sit on your hands and wait for the advantage of a clear path. That advantage presents itself when both the small and the large break through the area. So no triggers through, no clear path, no trend trades long. Both small and large break through the area. There's one of those tails again. We now have a clear path and odds favorable momentum. There's a potential entry for a long. And then we said that your high probability is going to take you into a medium probability scenario. How do we gauge if an area has the potential to break? Well, the small triggers break through the area. The large triggers have not. But the key to this look, guys, this is what we call a 50-50 look. 50% of your triggers are through, 50% are not. This area has the potential to break because of the odds favorable momentum. But because it hasn't broken yet, it's not a clear path. Rule number 2 hasn't been met. This is an issue, and it's imperative that your entries on the 5-1 as a new user are really solid, clear-cut entries, because this area may ultimately not hold. You can see here the smalls broke through, the large did not. You have one of those 50-50 scenarios, and ultimately support holds. Here we have a termination condition that turns into the potential to break, that turns into a broken area, guys. It's an order of operations. Your job is just to be a little calm, a little patient, and wait for that advantage. Is everybody okay with the recipe for a termination condition? Price reaches the area, not trigger lines reach the area. Price reaches the area. If the trigger lines don't break, the area is not clear. We're not taking long trades into this area of resistance. Price pulls all the way back to support, all the way back to a mid-band. Absolutely none of the trigger lines break through. Guys, we don't have a clear path. No short trades. And this is one that gets new users, and they say clever things like, hey, Mark, if I can't go long and I can't go short, how am I supposed to make any money, right? Well, 90% of what you're doing is just going to be reading the indicators, reading your charts, waiting for the advantages. Ultimately, price comes back to resistance, comes back to a divergence high, comes back to another set of resistance. None of my trigger lines break through the area. Guys, this is what we call a pivot stop out. When price trades above a divergence line or below a divergence line at a bottom, and then back below it, don't take any more long trades, guys. Not only did the market lose momentum, price retested it, couldn't do anything per the trigger lines. This termination condition absolutely creates a full reversal. Large triggers go from green to red. We ultimately get odds favorable momentum. We're looking for the clear path. We're looking for the best of the best. This is what we call a strong top. So Marshall, all we're saying when I use the phrase price reacts, so it's not just you guys that see these key Fibonacci areas. When John Novak developed the software 27 years ago, he had a friend in the pits at the CME in Chicago. And when he was developing this Fibonacci, he was going through these algorithms and creating this amazing stuff. He used to call his buddy in the pits, and he would say, hey, these are where my fibs are. How do they line up with what the institutions are doing? Because this guy's job in the pits was to know where buys and sells were happening. That was his job each and every day. And he couldn't tell John the answers, but what he did tell John is that you are about 50 cents off. So not only do Nexgen users recognize these potential turning points, they're the same turning points that are creating reactions from investors. And you can see how Fibonacci resistance holds. Absolutely no trigger lines broke through. This is a textbook termination condition, right? Resistance holds, absolutely no trigger lines break through. Resistance holds, absolutely no trigger lines break through. Pull back to this key area, all the trigger lines remain up. Look how the market continues up. So what you're going to find is that through that simple recognition of price reaches the area, that area where it may react, no trigger lines go through, it becomes a bit of a safeguard to keep you from trying to go long into an area that may reverse the market. Does that make sense? And that's all we're doing, is we're giving ourselves the advantage of a clear path because, guys, you are so fortunate. You have the same information that these big money institutional traders have. So once again, price reaches support. Absolutely no trigger lines break through. We know that we're not going short, but it's not time to go long yet, right? Because the momentum's down, because the trend is down. When this termination condition, absolutely, Marshall, the price bar reaches, because sometimes, and I think we just saw it, look how far away the trigger lines are. So it's them actually pushing price to that key area. And look how far away those triggers are. If we waited for the trigger lines, guys, we would have been stopped out already. And you'll see that sometimes those 50-50s, where the smalls break through and the large don't, that momentum carries it, and then ultimately the large triggers never break through. But it's all gauged on price. Great question. But when this termination condition creates the full reversal, red go to green, green get wide, angled in the direction, smalls get above the green, clear path. Guys, there's another one of those tails. And these tails are the potential entries on the 5-1. And then one more termination condition, guys. And this is the one that doesn't rely on the 13-2. This is the one that you're going to see first on the 5-1. Sometimes your market pivots from the middle of nowhere. It doesn't reach one of those key areas. Well, 3 divergences, which means 3 losses of momentum that you can visually identify with a negative number and a cyan line, a negative number and a magenta line. When 3 divergences happen in the same price range, it may terminate the trend. That alone is a termination condition. It becomes even more powerful when the third divergence happens with the small triggers inside of the large triggers. Because what did we do? We went from odds favorable, lost momentum 3 times via divergence, and lost momentum via those trigger lines. That anything can happen look. That's a termination condition as well. And then finally, it becomes even more powerful when that third pivot from a low pivots higher than the previous, or that third pivot from a high pivots lower than the previous. Now you have that head and shoulders pattern. And not only did you lose momentum 3 times, but price couldn't even exceed the previous pivot. It's a very visual slowdown. This is going to allow you not only to manage trades assertively. If you're in here, you can see that slowdown, get out without a loss, a small loss, take profits at problem areas. But if you see this on the chart on your 5-1, it may be indicating some change that's happening not at a key area on the 13-2. So guys, termination conditions have to be false. You have to have the advantage of a clear path. You're going to couple that with strong trigger lines, providing the advantage of momentum. We're 2/3 of the way through the equation of a trade. Now you just need to pinpoint where the market's likely to continue, guys. And this one happens on the 5-1 chart. On the 5-1 chart, rule number 3 says, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So when everything says up on the 13-2, when there's absolutely nothing in the way on the 13-2, this is the look of my 5-1. Everything is strong. Large triggers are wide, angled in the direction of the trend. Small should be above the large, and you're just going to focus your attention on these 5-1 large triggers and the areas that may fall within them. Areas where trend trades originate are fibs, mid-bands are 1-to-1s. But rule number 3 says that we're going to buy a pullback at an area inside of favorable large triggers. Let's define favorable large triggers too, guys, because everything's about advantages. Favorable large triggers mean that your large and synthetic should be overlapping. They should be trending one on top of the other. They should be strong in the direction of the trend. In an uptrend like a shark preparing to breach, and a downtrend like an eagle diving for its prey. By having these one on top of the other, it's going to provide your absolute smallest of window of opportunity, the absolute smallest area where the market is likely to continue. And you're going to identify that window of opportunity when that pullback begins, that little push against the overall trend. that small retracement counter to the underlying trend. It begins with a reversal bar on the 5-1. At the time of this reversal bar, you can use a drawing tool. Some will do it. It's a shortcut, F11. You're going to highlight the large triggers in any areas inside, fibs, mid-bands, and 1-to-1s. Your window of opportunity for a long trade is from your highest point of support to your lowest point of support inside of favorable large triggers. Your job as a rules-based trader is to activate a limit order right at the top of the window, a tick or two above your highest point of support for a long trade, a tick or two below your lowest point of resistance for a short trade, and then you're going to let the market do what the market does. If it comes back and reaches that 79.21 area, you're in a trade. The equation has been met. Your rules are true. You have momentum, you have a clear path, and you have an entry area. Your initial stop will go below that window of opportunity, below that lowest point of support inside, because that's where the market shouldn't go. If this trade is going to be a winner, if this trade is going to be one of the 70 to 80%, it should continue from this window of opportunity. It's not guaranteed, but if you take 100 looks just like this with the rules met, 70 to 80% of the time, this is your result. Once it begins to move in the direction of the trade, you can reduce your risk below the reversal bar. Because you waited for the pullback to the area inside of favorable large triggers, your risk is reduced. Your profit potential is increased. And guys, we're going to learn how to study this so that it becomes easy. Recognition through repetition to make this easy. When the rules are met on the 13-2, when I have odds favorable momentum, Marshall, you can do whatever you want, but your advantage comes from it pulling back to an area inside of favorable large triggers. So don't limit it to the mid-band either. Your advantage comes from the pullback to fibs, mid-band, or the 1-to-1s inside of favorable large triggers. And let me show you why. So check this out, Marshall. You ready? Let me take a picture. I love this picture. I think that's a great question because really what we're doing is we're building trust, right? We're building trust through repetition. So what I see a lot, Marshall, is right here. The market bounced off of the large triggers, right? And when it's going up, new users get in right here. They're like, oh my gosh, it didn't make the area. I better jump in. Well, what you've just done is now your risk is still all the way down here. You've increased risk quite a bit. And what's the flip side of that? Look at how much less profit potential you have. So if it doesn't make the area, Marshall, one of my favorite phrases is not my trade. It's not strong down triggers. I'm not looking for strong down triggers. What am I looking for? I'm looking, let me find my picture. I'm looking for odds favorable momentum on the 13-2, Marshall, so everything says up strong. I'm looking for no termination conditions on the 13-2, so I have a clear path to my target. On my 5-1, I'm waiting for this reversal bar. Excuse me. And at the time of that reversal bar, I'm highlighting the areas inside of favorable large triggers. And I'm saying hell or high water, this is where the market is likely to continue. This is where my limit order is going to be. Things that are going to happen, Marshall, these small triggers are going to turn against you. They have to. It's a smaller, faster chart. It's a refinement chart. And what happens, remember what happens in one bar on the 13-2 is going to happen in 15 to 30 on that 5-1. And the only way that this chart is going to get back to that best of the best area typically as if these triggers turn against it. But you notice that they're still strong, right? They're still outside of the large. So the only thing I'm using that 5-1 for is my window of opportunity initially. Taking that absolute best of the best trade when the rules are met on the 13-2. And if you start going through a couple pictures, you got that reversal bar. You identify the large triggers. There's only one line inside of it here, so only one area where that market is likely to continue. I'm ignoring the one-to-ones outside of the triggers. I'm ignoring resistance outside of the triggers. Reversal bar prints, I'm highlighting the triggers, and I'm looking for that window. See how it goes from support? And sure enough, so what these areas do, Marshall, is they act like a brick wall. I'm throwing a tennis ball as hard as I can, and I'm hoping that this brick wall creates a bounce. This is where the market's likely to continue. So getting in early increases risk. And then if you take a loser, all you've done is lost more, right? So your job for the first 20 days is just nail these entries. Get really good at recognizing where the market is likely to continue and ignore those areas outside of the trigger lines. Does that make sense? All good? Cool. And now it's just a matter of studying, right? Taking this picture. Did I close it out? I closed it out. When the rules are met, taking your picture, annotating your chart, and guys, getting it into this spreadsheet. You all have access to this spreadsheet. Does everybody have a copy? Is everybody using it? John just uploaded the most amazing spreadsheet ever. Here's a link. It should be in your Nexgen study picks. So Marshall, this is what I encourage all new people to do. Some people listen to me. Most people act like they're married to me and don't. But you have 150 plus another 16, 166 pictures of perfect entries, right? 166 examples of rules-based. Who's gone through all of these? Marshall, you should spend an afternoon and look at every one, right? Burn it into your memory. If you're struggling with entries, guys, 160 versions. I'm going to give you every tool you need to be successful. All I need for you to do, the picks aren't coming up. You need new hardware? You may. Are you running on a slower computer? So you may want to go ahead and when you're done with the day, when everything's shut down, go through your spreadsheet. But check this out. Doesn't this one fit? Odds favorable momentum, nothing in the way. There's that pullback right to resistance inside of favorable large triggers. And then sure enough, it happens again. There's another pullback right to resistance inside of favorable large triggers. And our chart reading tells us where the market is likely to go, blue Fibonacci support. So your job for 20 days, Marshall, everybody, is to nail that entry, to get that best of the best entry. Here's examples. Practice it. And even more so, go back on your charts when they're live. And if you see odds favorable momentum in a clear path, circle the tail. And then come back to your 5-1. Where's that circle? Guys, this is crude oil at 8:55 a.m., less than an hour ago. Let's take a picture. And let's annotate a chart together, guys, because do you see how this has already happened? I'm not making money off of this trade. But Marshall, help me out. Did I have odds favorable momentum? Were the small below the large? Were the large wide and angled in the direction of the trend? New people, this is your opportunity to get just a little bit smarter. Odds favorable momentum? Absolutely. What about termination conditions, Marshall? Did price reach an area? Remember, we're looking at the price bar, right? There's nothing in the way. So can we say that we had a clear path? I'm going to say yes. So now our job is to wait for a reversal bar. There it is. That signaling that small pushback. And guys, I'm going to take a shape tool. I'm going to go from the top of my triggers to the bottom of my triggers. But that's not my window, right? Where's my window? That area of resistance inside of favorable large triggers. And I'll be damned, guys, it bounced right off of it. Guys, this is a high probability trend trade. Your job is to go back, scroll back, take this picture. Area inside of favorable large triggers. And say to yourself, this is my best of the best. This is the look that gives me the advantages. This is the look that typically wins 70 to 80% of the time. Take that picture and get it into your spreadsheet, guys. Go back and study that picture every day. There we go. Perfect high probability trend trade short. There's one more for the collection. Take this picture, put it in the room, and say, hey, Mark, this is the trade I took. I wrote my rules on there. That was my entry, right? And I'll say, you better believe it was. And guys, your software goes back 10 days. All you have to do to study is look for odds favorable. This is one of those likely to break but not broken, right? What did it look like? Well, there's your first entry, and it's beautiful. And then you get a second divergence, and then you get a third divergence. You could have managed out of this trade, avoided a loser, and ultimately it goes up a little bit and then reverses. But all you're doing is weighing advantages, looking for odds favorable, circling tails. And guys, that one didn't hit it, did it? Big split triggers, not favorable. So we just move on and we don't take a picture. This market's been busy today, hasn't it? Let's do one more. Is everybody comfortable? This is how you study, guys. This is how you're going to develop your collection of pictures. That was 4:30 this morning. It took a while to get my rules met again, didn't it? But if I was patient, if I waited, there it is again, guys. What do you think? So this is your pattern over and over, guys. All you're doing is building trust. Are there any questions about the high probability trend trade? Are there any questions about momentum? Are there any questions about termination conditions? Does anyone have a question about entries? Guys, this is your S&P right now. News just happened, and in 13 minutes, we're going to have some pretty high impact news. You don't only have to study entries, right? Price reaches a divergence low, absolutely no trigger lines break through. Guys, you know that you're not looking for a short here, right? And sure enough, a short didn't work because of the termination condition. Termination condition here pushes the market back up. And then guys, here's another one of those rascally tails. What's it look like? Oh, this goes back into yesterday, doesn't it? I can study yesterday's stuff. But there it is, pullback. It does hit support right at large triggers. Not the best look, but it is a look. So guys, you have the tools to study. You have the tools to recognize tops and bottoms. You have the tools to understand where the market is likely to continue. The only thing left for you to do now is to take your trades, to post them in the class, to ask for feedback. Let me do my job, you do your job, and we'll get exactly where we want to be. The second half of class is me clicking on your pictures, guys. Everybody posts. Gary's posting right here, and there's 3 types of pictures I like you guys to take. Take a pre-trade picture right before, when your limit order's waiting for the market. So you can come back and study it without the emotion or anxiety of a brand new trade, right? And you can say, hey, this is my pre-trade picture. All of my rules were met. I feel good about it. If you have time, take a picture during the trade because this is going to help you develop a management plan. Take a picture after the trade. After you exit, look at the conditions. See if it made sense to exit. That's going to help with a management plan. And then, guys, one of the most effective pictures I think that you can take, and this is what Gary showed us right now, is take a picture when your rules aren't met. That's John's momentum trade. Maybe not into a termination condition from a bad top, Rain. From a good top with a clear path, absolutely. But see how this is a mid band from a bad top, support from a bad top, pivot stop out from a bad top. This is one of those scenarios where the market's likely. Well, but price has already reached it. And remember, it goes into price. No? I like it. Let's see what you're saying. And guys, there's chances where I may be wrong. So right here at 43.25 is 43.25, right about there, that tiny little pullback. Can we agree that's the spot? There's your little tail. Or are you talking about this one right here? This one right here? Because the lower one has already reached support with absolutely no triggers breaking through. Is it not? There's your term. It's bouncing off of the termination condition to get back to the one-to-one, right? So what's the recipe for a termination condition? Price reaches an area, in this case, blue Fibonacci support. All of my trigger lines remain above it. Textbook, isn't it? Sometimes, but isn't that a great discussion though, Rain? I love discussions like that because what it means is maybe you need just a little bit. No, man, it's not even that. It's okay. If this were coming from Fibonacci resistance, if this were coming from a strong top, it may be a different scenario looking for this trade. But because of that blue fib, we're not sure. And then what happened? Check it out. There it is right there. Look how that one held. Pretty awesome, right? The same termination condition that Gary said he wouldn't trade into is the same termination condition that bounced that market all the way up to Fibonacci resistance. And then Rain, this is a great lesson, and this is a good one for everybody. When you get this pivot that doesn't happen from a key area, these areas are very likely to hold. 50-50s here are less likely to work. And then the market loves to continue up to that next key area. Fibonacci is unbelievable. Every chart has strong triggers, momentum, market flow, price is below all triggers, the 5-1 pullback, except for the term. Absolutely. 100%, Rain. 100%. Without hesitation. Yeah, that blue line spoiled the party. If this blue line wasn't there, 100% absolute rock star trade. I feel like that's a good lesson. Gary, great picture. That helped. We're pulling smart stuff from it. And guys, this is what this class is for, is every time a picture is posted, It doesn't have to be your picture. It doesn't have to be your trade. It doesn't have to be your chart read. It is 100% open season for everybody. If you have a question about what you see, let's talk about it. Let's make sure that you're comfortable. And then Ron C says practice makes profit. When everything is down, when everything is strong, when the path is clear, Ron loves to take a bite. Feather boa or the snake? And Rain, please don't ever be sorry about interrupting. My hope and prayer is that you guys interrupt every time. Because when you interrupt, the lessons get better, the class changes direction, and everybody gets an aha moment out of it. So, Ron, nice job. Gary. Not really a bingo, but a bazinga. Guys, that's $100 on 2 contracts. That's a $200 trades in a matter of seconds. Do that 10 times a day and let me know how your life changes. Great trade, Ron. And then Gary. Once again, termination conditions. I love it. Just reading charts. Taking pictures. Guys, you could take every one of these termination condition pictures and drop them into the termination condition section on your spreadsheet. Go back and study them, and you will be less likely to trade into termination conditions. Gary's just doing a lot of chart reading this morning. I love it. David, let's see how you did. No good tops or bottoms. Are you missing something here? Not termination conditions? Not at all, David. You're not missing anything. Today is Wednesday. Wednesday is typically crude oil inventories. And one of the things that happens on crude oil inventory day is crude oil can be a little bit wonky, back and forth, not doing what it should be doing, or hitting patterns, hitting areas. Because what's happening is they're jockeying position, waiting for news. And that news comes out in 30 minutes. So yeah, you're not really missing anything, except for right here, resistance holds, creates a full reversal. 70.14 was a great top. There's your odds favorable momentum to take a chunk out your style, David. Do you see it? Yeah. Other than that, maybe a little run right in here. Once again, odds favorable, everything in line. And then that little chunk right there. Because remember, what you're counting on is that momentum, right? The top or bottom helps. But you're looking for that crazy strong nuclear momentum. And that's where you'll start grabbing those little chunks out of it here and there. Let's see if Ron gives us an example of it. Everything says down, hadn't reached the termination yet. See how Ron gets in, gets out, boom, boom, boom. And guys, remember, where you're at on day 1 isn't where you'll be on day 100. It's that repetition, it's that study, it's that over and over, getting more and more comfortable and confident each and every time. Gary, termination, full reversal, pivot, stop out, right? Divergences on it. Your rule's not met because the triggers hadn't broken through the area just yet. Guys, one thing that'll happen too, if you take pictures when you can't trade or when your rules aren't met for trading, is you're just getting smarter. But you're just confirming and you're keeping yourself busy. Rather than fabricating trades, you're looking for them. So strong top, odds favorable. Looks like you may be trading into a little bit of a termination, but you let it clear, and then you take your entry and you take your quick money. Boyd, I like it. I love that this trade has become so impactful for you guys. And I like it for one major reason, that it revolves around odds favorable momentum, that it revolves around a clear path, guys. Your first two concepts that we talk about each and every day, the first two ideas, odds favorable momentum, right? I accidentally closed out. Relying on a market that's likely to continue in the direction of the trend, and then making sure that you have a clear path. Guys, this is the basis. And then once you have this foundation, it's time to grow from it. Guys, there is high impact news in 1 minute. Let's see if the S&P reacts off of that termination condition. Safia, termination condition, textbook. You still take the entry and you take quick profits. Safia, 100% textbook termination. Without question, without hesitation. Rule number 2 not met, not even a little bit, not even close. You managed it assertively with the momentum, which I love to see, right? And that second divergence pushes you down. You knew it was, but you wrote that it wasn't. And Ziba, you were tempted. And Safia, you pulled one off there with that momentum, right? That much momentum, pushed it up just a little bit. You managed to get out. Nice job. Great execution. But guys, this should be some high impact news coming up right now. We'll see how the S&P reacts or doesn't react. You're welcome, always. I'm going to take 5 minutes. I'm going to go reload my water real quick. I'm going to grab a sip, maybe say good morning to my wife. And then when I come back, we'll start looking at the live charts. We'll start looking at your charts. We'll start talking about advantages, disadvantages. We'll start talking about termination conditions, momentum, looking for opportunities. We'll do some small chart reading, looking at trigger line location versus divergences coming off of termination conditions. And we'll talk about expectations. Expectations like bad tops, pivots from nowhere, coming back to that mid-band, back to support, and finishing the move to the next key area. Everything we do is repetition, guys. I'll be back in a few, and we'll have a great conversation. All right, termination conditions for the win, right? Why don't we trade into termination conditions? Because we're not the only ones that see them. Lot of deep pockets people. They know that key area is there, right? And because they know that it's there, they're likely to go. All right, Ziba, you want to talk about the 21-3? Is there something specific that you'd like to talk about? I'll build one. I don't even have one. I don't feel like I need one, but let's build one. Let's see. So I'm going to give you two sets of information regarding the 21-3. The first set, so the first set is Ziba, every pattern that happens on a 13-2, that happens on a 5-1, they're just patterns, right? So let me get a big old 21-3. And this is kind of how I like to initially introduce it. It is. So this is, so the way the 13-2 is to the 5-1. Here, let's do it this way. Dun, dun, dun. It's always better if I sing a little bit, right? So 13-2 is, or the 21-3 is to the 13-2 as the 13-2 is to the 5-1. It's just Fibonacci sequence. So termination condition, right, on the 21 is still a termination condition on the 13-2. And is that 3 divergences on the 5-1? Nope, but it's a term, it's that fib, everything below. So what we're looking at, Ziba, one way that you can use the 21. Let's say you have a 50-50 somewhere on the 13-2. For example, right here. And you're saying to yourself, well, here's a 50-50 on my 13-2, but my 21 has odds favorable momentum into a termination condition. So you can use a higher time frame. The same way the 13-2 says it's time to get ready on the 5-1, the 21 can kind of confirm the 13-2. So one thing that I'll use is if the 21 has a clear path, maybe the 21's coming from a strong top or bottom, it might add a little fuel to the fire to taking that medium probability on a 13-2. But really the only way I use it is identifying areas. But the reality is I already know they're there because they're synthetically placed on those other charts. So for high probability trend trades, identifying areas, maybe a key pivot stop out that may push the market down. But the patterns are the same. And one of the things that holds true is Nexgen software works on any time frame. So let's say, Ziba, you decide one day you want to be a NASDAQ trader, and the NASDAQ moves so fast that a 5-1 is too fast to trade it. Some people will take the 21 as their lead chart and then look for entries on an 8-2, a different part of the Fibonacci sequence. But it's the exact same chart. Use it. You can use it for areas, but there's your areas right there. So this says termination condition. It coincides with the termination condition, which coincides with the termination condition. If nothing else, it just confirms that this is an area where the market's likely to stop. And then When your 21 is odds favorable and everything's breaking through, see how your 13.2 pulls right back to mid-band and support? This look here says don't try that short. Probably not going to work out for you. Does that make sense, Zeba? You want to know my honest opinion? Until you're really good and consistent on 2, yeah, it's just people are going to add information over and over. And I like to focus on what's important initially and then adding in that bigger chart to be one more level. But what happens is you may make a bad decision on your smaller charts because a larger chart says, hey, let's make a bad decision. And you may take, yeah, it can be. So odds favorable momentum on the 21, right? This makes me feel good about any longs that I might take. Does that make sense? That's a great way to use it. But, and yeah, it said down all the way yesterday. Well, won't my 13.2 do that? So think about it. Let's circle. Watch this. You ready? I'm going to use a rectangle. And I'm going to circle 1 bar on the 21.3. And look how many bars it is on the 13.2, but more importantly, look at how many bars it is on the 5.1. So Zeba, how can you make a decision here based on a single bar here? Does that make sense? So there's that 1 down bar. And it pulls it all the way back to support, right? With odds favorable momentum. And there's all those bars. So it becomes a little confusing, I think. It's pretty easy to make decisions based on whichever chart gets you into the market, if that makes sense. Awesome. Then it sounds like you're using it wonderfully. So the 21 says termination condition, odds favorable. The 13.2 says termination, odds favorable. The 5.1 says everything says down. In the event of a pullback, there's my areas inside of favorable large triggers. 13.2 says that 41.45 and change hasn't broken yet, but has the potential to break with odds favorable momentum. And then you'll make a decision on whether or not that's one of those 50-50 trades that you'd like to take. So Zeba, you may say termination on the 21 on every chart increases the likelihood of success. So you may just say, without a doubt, without hesitation, let's turn my chart trader on. That's a trade that I'm willing to take just below the area of resistance inside of favorable large triggers. Does that make sense? There's a good general termination conditions on every chart. Odds favorable momentum on every chart. Area for entry on your entry chart that lines up on everything. That's a great way to help make a decision, a great way to use that larger chart just to not get you into the trade, but just say, you know what, let's get some warm fuzzies. Everything is a termination condition. Everything is odds favorable. Everything is a potential pullback right to an area of resistance inside of favorable large triggers. It is not a high probability trend trade. This would be considered a medium probability trend trade. And because now our areas are outside, well, that 49.25 is still a potential, right? So if I get in at 45 at the bottom, that's a big window on a medium probability. Absolutely it was, Rain. Absolutely it was. Clear path, right? No divergence. Termination, strong, small, strong, small. That was a rock star momentum trade. You think it's too soon, Jose? That's cool. So another way, that 21. And this is just me. If I have a textbook termination condition and a textbook termination condition and a textbook termination condition, and I've got smalls cranking down with aggression and smalls cranking down with aggression, and I get a no divergence pullback to one-to-ones at a mid-band, the large triggers are down, odds favorable, small. These are going to take a second to roll, right? All day long. I love that look. Because of this termination condition. And then Ziba, that termination condition was confirmed, wasn't it? On the 21 as well. No trigger lines getting through areas here. You've reached the bottom of your window on a 50-50. Everybody's got a different style, right? Everybody has a different comfort level. And if you took the first shot at it, you might have made $100 and then gotten out and then waited for market flow confirmation for the second. Triggers still greenish? No, they're actually green for sure. Jose, can you give us a full look what market flow said too? And Jose, this is absolutely still triggers up. What is the momentum trade, guys? Is the momentum trade a safe, warm, fuzzy, high probability trade? Or is the momentum trade your first shot at termination conditions everywhere? Understanding the difference, just because there's rules for it doesn't make it a high probability trade. You're banking on this termination condition on every chart changing the direction of the market. You're banking on these strong small triggers providing enough momentum to get you at least to the mid band. And you're banking on this look right here to give you a low risk opportunity to get to that first trouble spot. Guys, it's not a high probability home run trade. It's a this says, these say, that says, get in and manage the hell out of it, right? And I think that's one of the things that people forget is just because there's rules doesn't make it high probability. You want the 5-1 small triggers below the 13-2 small triggers? No worries. Those are your rules, right, Rain? Your rules say. It's an individual sport. Guys, I don't give a flying about John Novak's rules. Rain, John Novak has 27 years experience. Whoops, I only got the 7 in there. I don't care what John Novak trades. I can't trade like him. Let's just look. Strong 13-2 trigger lines on the large chart must be true. Know your target spots. Termination conditions have to be there. Room to the target. Small trigger strength. 5-1 small triggers, think. Location relative to the 13-2 small triggers. Enter on the pullback to the fibs. So where are the small triggers here? 49.25, 49.25. They're below the small triggers. No, me too. Rain, I don't take this trade very often, so I love this. I love this conversation. And maybe the part that's a little misleading is that's not odds favorable momentum, right? And that's what Jose said. These are still up, so it's not odds favorable. If I go to the Discord room, whoops, that's not it. If I go to the Discord room, that's HVA, momentum, 13-2 trigger lines on the large chart must be true, strong. And what I'm wondering And this is just me, and I'm going to ask John for clarification. Is he talking about the small here because we're coming right off a top? Because he knows that these take a while to roll. But they are below the large, which is a good look. And then your small triggers on the 5-1 are below the 13-2 triggers, which is a good look. So I think the thing in question here, maybe I can get some clarification, is when you're looking for that momentum style trade, I'm going to ask him this question. I'm going to send him this picture, and I want clarification too. I don't take momentum style trades. It's not a part of my plan. So for me, I like to ask. Close what, Rain? You want me to stop talking about it? Let's see if market flow gave help. That was it. And then you say prices were below the trigs here, though. So yeah, that's a good look. Trade was almost there. Awesome. Oh, got you. Like Jose said, yeah. And that's where I think interpretation comes in a little bit. And that individualization of a plan. Finding what you're comfortable with, right? Finding what makes you happy, what makes it easier for you, what makes you feel good about what you're reading. Guys, I've met people that only take long trades. Like that's what their brain sees is long trades. I've met people that identify shorts 1,000 times easier. I know people that only take momentum style trades. I know people that only take trend trades. People that only take HVA trades. So everybody has a preference, right? I'm going to get rid of my 21 because that feels like too much for me. I'd rather have an 8 range than a 21. And I think that this is great discussion. And Rain, that's something that I needed a little clarification on. So I'm actually going to bounce that picture over to John Novak right now. And I'd like his feedback. Time to get ready. I love it. That means rules are almost met. And guys, it's a great thing to be able to do this. Sorry, I'm typing over to John. What do we see? Divergence prints comes up right to the top of the triggers. Remember, guys, medium impact, right? Or medium probability. Yeah, depending on the day, Jose. I have those days too. Gary, S&P, termination, full reversal, 50-50, divergence prints. Did you get a market flow signal? Did not get a market flow signal. You're looking at the down bar, right? This was a mistake that I made a lot, Gary, in the beginning when I started using market flow. Let me see if I can help a little bit with it. And this is exactly what I got. So I took a reversal bar as a signal. For me, I was like, okay, cool, there's a reversal bar. It's time to go. And if you dig just a little bit deeper, and this is a great conversation, especially as you guys start working 8 range into it. And Rain, I agree with you 100% on that one. And yeah, 4 minutes until crude news, guys. So Gary, when we're looking for those, and this is everybody, as you add the 8 range in, you know to 50-50 with divergence. I'm inclined to agree, Jose. There are instances where I'll break that rule But everything has to be perfect. Perfect, perfect, perfect. And I need to be able to get into it with very low risk, very small window of opportunity. And I'll show you my picture for it too. Yeah, well, you go into it knowing that it's not a high probability trend trade, right? And that's the key, knowing your odds. Guys, there's only one trade that I teach that's high probability. And just because there's rules for something doesn't mean that it's a 70 to 80% winner. There's only one rule that I teach in this classroom that's considered high probability. That's it. All right, so arrows generated by white bars. Guys, for those of you getting into market flow, arrows generated. So what happens is as it comes into the area, a white bar comes in, and then there's a reversal bar. But in order to use just a reversal bar, like a blue or a red or a green or a red reversal bar, you want that green arrow for longs, you want that magenta arrow for shorts. So Gary, had your picture had that magenta arrow over the reversal bar, absolutely. It would have fit the rules for an entry signal. The other one that you'll look for is a yellow signal bar, a yellow bar signal, which is a reversal bar coming from the area where the market is likely to continue, whether it's up or down when the rules are met. And then there's that final bar, and this may have been what got you. So there's what's called an antenna bar. And this is a bullish one. This one's to the uptrend, and it means that the body is small and the high volume area of the bar is below the body. So there's a stem between. It looks like that 1970s television antenna on top of your house. So there are some bullish, and then you get the bearish where it's got that body separated from the bar. So those are your signals. So guys, show me an 8 range again. Did we get a signal from up top, from the high end? Because if you enter here, let's do, there's the top of my large triggers, there's the bottom. That's your window of opportunity. It went right from the window of opportunity, didn't it? Does everyone see that? It went from the window of opportunity. It just went from the top. And then Gary, there's your antenna bar that signals your entry. Does that make sense? Little bit of divergence has the potential to push it higher. Sure enough, it does. And then there's your antenna bar signal to get you in. Your risk is already established. I hope that helps a little bit. No worries, and that's great realization. Guys, if you find yourself flustered, take a break. But give me a Y in the room if you see that this did, in fact, go from the window of opportunity. You just had to wait for that reversal bar. And how hard is it sometimes to watch the market go against you 3 points? Guys, that's a lot of risk on a 50-50 trade. Yeah, and if I was better looking, I'd be in Hollywood. That's okay. What's done is done, rear view mirror. So now we start looking for the opportunities to set themselves up again, right? Gary, it was a great trade, and it was a great lesson. Initial stop, straight from the manual, right? My initial stop has to go where the market shouldn't go. That was a wonderful trade. The execution needed just a little bit of assistance. Don't blame the trade. It was an amazing trade. Just a great learning point. Protective stops have to go where the market shouldn't, guys. And if there's so much risk that you're uncomfortable, with that protective stop above the 1-to-1s because it was right there in those large triggers when you got in. If you're uncomfortable with that much risk, guys, it's cool to not take the trade. That's okay. Everything still says down, right? Every trigger line's down. I have odds favorable. Every trigger line's down. There's an area of resistance inside of favorable large triggers, guys. Sometimes they give you a second chance on a continuation style. Sometimes they don't. But are the rules on the 13-2 still true? So, good stuff. I think there's a great lesson in there for everybody. Stop placement management. Guys, it's eating an elephant, isn't it? Man, crude oil's trying. It is still a 50-50, isn't it, Jose? Large triggers haven't broken through the area. So if this isn't your trade, totally cool. If this isn't your trade, totally cool. Hang out. Wait for the best of the best. It's okay. New users, one of the things that that gets you on this first medium probability trade, I've got a couple pictures of it. Yeah, so you've got odds favorable, right? You have an area that hasn't broken, and Jose, that's a good read. You know that it's a 50-50 because the area hasn't broken. So when you talk about medium probability trades, we'll go back to it now that we've done a little chart reading together. Medium probability trades are defined when most of your indicators line up for a trade, however a small issue exists, right? On a 50-50, your small issue is that the area hasn't broken. But because of the odds favorable momentum, it increases the likelihood that it will break, right? And you're going to have to execute them, take them assertively. If there's trouble in your way, you may take a portion off at that area, get to zero risk. So if I have a 50-50 and I have a small issue, on my 5-1, I can choose to not compound my issues, meaning I can choose not to let divergence print. I can choose to have a small window of opportunity. I can choose to have strong triggers because my issues on my 13-2, there's no reason to create more on the 5-1. Does that make sense? My issue is this area hasn't broken. There's no reason for me to compound issues, strong triggers, small window of opportunity, tight window, no divergence. So this is a pretty solid approach for brand new users as you begin to get into 50-50 trades. And then what you'll find, especially if you put every 50-50 trades you take into a spreadsheet, you're going to begin to recognize the ones that win more than they lose. You're going to begin to recognize the patterns that create problems. You're going to begin to recognize maybe when you should sit on your hands. So now we have a pivot stop out, right? On a 50-50. And Rain the Pineski, I love that that's a thing. Suggests that, well, that's the wrong color, isn't it? So if a pivot stop out's going to take out the prior pivot, there's my prior pivot. This pivot is on the wrong side of everything, isn't it? This pivot is not inside of favorable large triggers. My smalls are inside the large. So it's not a high probability trend trade anymore. A short from up here would need something else telling me that that's an area likely to hold, right? And is then now the third or well, there was a previous divergence, right? There was a previous low that swung over. But that one's kind of going through. Because no trigger lines had broken it, it continued to print. So now we have one. It's done printing. It's out of there. We have one. We have two. And divergence is true. The anticipation is a push-up. So maybe this is where market flow users wait for confirmation. No confirmation, no trade. Yeah, well, the small triggers are very strong, but they're inside. Everything's pointing in the direction that you want that market to go, right? But isn't this 2 losses of momentum on a 50-50? So you have to ask yourself, am I cool giving away momentum twice on an area that only has the potential to break? Is that a risk you're willing to take? And guys, I can't answer that for you. So Rain, this is where, do you have a 21? Zeba, I shouldn't have deleted that chart, right? Do you guys have a 21 chart? Let me pull one up. Let me build one real quick. Coming right up, guys. So if I build a 21 chart, what if that 21 is odds favorable, no terminations, everything screaming down, haven't hit an area? Well, it's right into a mid-band. My large triggers are just about a full bar away. Just gets a little wonky, doesn't it? The large triggers are not overlapping now. I know they're split. So what does that do? Creates a bigger window of opportunity, doesn't it? But check this out, a little bit of patience. Now we're no longer 50-50. We don't. Joel, I used to get all sorts of flustered. Jose, strong triggers, no termination, entered at the area. I love everything about it. Rules-based, right? 100% rules-based. It is a 50-50 on the divergence low with divergence. Isn't it, Jose? You know there's a key area. The smalls broke it, the large hadn't. Because they started pushing a little bit, yeah. Once those large triggers start to print below, it'll stop printing. Let's see if we can find some examples. And that was kind of, there's a lot going on here, huh? No, that one still went a little bit. Maybe it's price. I like the trade. I don't disagree with it. Yep. Well, divergence will typically go a little bit and then, yeah, so you're good. One divergence, tight window, all good. The divergence pushed you up to the pivot stop out right outside of the triggers. It's rules based. We could sell it, right? Termination, full reversal, odds favorable. It was a couple minutes after news. Maybe somebody made a late decision. Just the cost of doing business. It just pushed up to that higher point, and I'm not sure what it did after that. And then Rain, you said it's going now. Remember we said, what was that little second chance opportunity that it gives sometimes? Pull back to the area at the small triggers. It didn't really get there. So guys, this is one that if you weren't in the original, you're just waiting for an opportunity. And Joel, in regards to being flustered, I like to address this. So when I first took trades, guys, my palms were sweaty. I couldn't focus on anything around. My heartbeat just went through the roof. And I would adjust my charts like this over and over. Does anyone else do that? Does anyone else? And I'm like, oh, I want it to go down. Let me give it more room to go down. No, wait. Oh, what am I doing? Shoot, was there a line? I don't know if there was a line. Oh, my palms are so sweaty. I'm going to short out my mouse, right? Anybody else? That's in my rear view mirror, guys. This doesn't happen anymore. Why doesn't it happen? Do you want to know the truth? And I'm going to be real honest with you guys right now. It used to piss me off to no end when John would tell me that he doesn't care what happens, because in my head, I couldn't fathom not caring what happens. It didn't even resonate with me that that would be an option. Um, and then what I realized when I finally got there was that I knew that when I executed my trade by the rules, when I took an entry that was rules-based, when I managed based on rules that provided advantages, I knew that I wasn't going to win every trade. So the expectation of losing was just as strong as the expectation of winning, because there were none on either side. And because I trusted my rules, I stopped worrying about the result. And guys, it may sound foreign to you, and it did to me very much. But when I stopped expecting to win every trade, I started winning most of my trades. And I didn't care about the result. I cared about my execution, because my execution had been proven through repetition and study to win more than it loses. Does that make sense, guys? We're going into psychology here. If I know that I have odds favorable, if I know that there's nothing in the way, if I know that I have a small window of opportunity and I enter within it, I know that I'm going to win more than I lose. So I'm not worried about the result. I'm only worried about my execution. And I don't let one trade ruin my day. One bad trade isn't a deal breaker, guys. If I take the perfect trade and it loses, it's a cost of doing business. If I break a rule, well, then I have to go back and take a look at it. What rule did I break? What didn't I do correctly? Was it my execution or was it my methodology? Because my methodology has already been proven to be sound, right? Your rules should be proven before they become your rules. But that's okay, Gary. Guys, I have days where I fight momentum and get my ass kicked. I have days where I fight the trend and I lose. I have days where I form opinions and it costs me money. Every trader I know makes bad decisions at some point during the day. The key is to keep going through the repetition so that you make less and less, so that your reaction time is better. And guys, you have to believe that you don't know what's going to happen next. You have to be okay with that. You have to believe that you're not in control. Define the reasons it may work, right? Define where your analysis will be wrong, or be willing to accept the risk by putting your stops where the market should not go before your edge is over. Why would you hesitate if the rules are true? You assume, believe, or think you know what's going to happen next, right? Guys, I love this. Have you read this? Have you guys read this yet? Why would you hesitate if the rules are true? If the rules are proven to win more than they lose, it's because you believe you think you know what's going to happen next. And when you believe that you don't know what's going to happen next and you're okay with it, you just take the trade and don't talk yourself out of it. The pain of missing the winner is usually worse than taking a loss. You have to believe that. And when you're fearful, every trade is life or death. We've all been there, right? Pain on every tick against you. Euphoria for every tick for you is what you experience. Guys, that emotional roller coaster is a rough way to trade. Your rules eliminate the need to know what's going to happen next. Follow your rules. Stop believing you know what's going to happen. Starting with a mechanical mode when paper trading to develop the skills you need to make money. Subjective trading mode is when you take all the experience you have reading charts and do what the charts say now. Intuitive trading, when you're in the zone, when you're one with the market, and just do what the market tells you to do in an unconscious mode. Guys, This is what you see a lot of people doing in Trader Chat. This is the stuff that you see John Novak doing when where you need to be is mechanical. And the technical analysis works because the market has a memory, guys. And being flat is literally putting money in the bank if your state of mind is wrong. Forcing trades is bad. Recognize the mental state before you do damage. Gary, you did a great job. You said, man, I got to take a walk. Perfect. Guys, read that. Go watch Mark Douglas. The guy's brilliant. Small above large, no termination. Areas not inside triggers. Sometimes it works and sometimes it doesn't. Jose, you gave up rule number 1, didn't you? They're down, but your trend is up, right? Don't fight the trend, guys. And this goes back to that picture that we showed earlier. Jose, do you remember this one? When there's indecision, this is where we get tempted to predict, guys. This is when we get into positions without advantages because they don't agree and I'm done waiting. I'm not waiting anymore. You can't make me wait. The triggers are red. I'm going to take that short. And then the market's going to move with the trend. So guys, good talks today. I'm not in control of the market, right? All I'm in control of is whether or not my rules are met. And if my rules are met, well, then I'm taking a trade. And if my rules aren't met, I got to sit on my hands. It's the only things I'm in control of, guys. And Jose, when you take this trade and it doesn't work because it fits the rules 100%, when you refuse to accept it as a cost of doing business, when you go through, and Jose, this is a perfect trade. Trades are going to lose. You're going to lose 30 out of every 100 in this setup. You don't know when it's going to happen. But when you accept that and you just say, well, it was a loser, you're less likely to take this one when the conditions aren't right. Because this is the I'm going to make up for the one that didn't work trade rather than just accepting it didn't work. The moderator kept telling to take a walk if you get frustrated. It helps, doesn't it? Get out at the profit or loss target. And it's all about having a plan, guys. It's all about knowing what you're going to do if something happens. Learning to day trade is like eating an elephant, right? Gary, you've got smalls below the large are down. Your window of opportunity, you're losing momentum on the 5-1, right? Smalls inside, so your window of opportunity is from here to here. So Gary, you have to make the decision on where you're going to enter. But where you enter doesn't change where you put your stops, does it? And I think that's a key point. Where you choose to enter. If I'm creating a window of opportunity, whether you enter at the bottom or the top, your stop belongs where the market shouldn't go, right? You have to determine. You either say, if I get in at the bottom, I know it has to go here, or you say, I'm not willing to accept that much risk from the bottom. I'll try it from the top because it suits my risk more. Because if you're in at 35.75, your 12 ticks is about right here at resistance inside of favorable large triggers. You have to be willing to accept the risk of putting the stop where the market isn't willing to go. Does that make sense, guys? Outside of the window of opportunity, only you can determine whether or not you're willing to put that much risk on a trade. I did. Are you ready, Jose? I'll show you the picture that we got out of it. Is that your trigger look for a short? Do you have any rules that say in an uptrend with the small above the large go short? So you broke rule number one pretty solidly. And that created a challenge, right? And what I was saying, and I don't think you were here for it, is when you take this trade and it doesn't work, right? When you have odds favorable, you've cleared those termination conditions, you had a perfect entry inside of favorable large triggers, and the trade didn't work, well, you start thinking to yourself, man, what did I do wrong? What changed? What didn't work? And then I think that when you don't accept this one as a cost of doing business, it becomes easier to try and take this one. But you had so many reasons not to take this trade. You're fighting the trend. There's no momentum. And look at your 8-range chart. Your 8-range chart had given you a pivot stop out with a reversal VAR marker that created an HVA line. And your smalls are on the wrong side. This was a hope trade, hoping that this resistance would push it down to the next key area. Because this one didn't work, perhaps. Does that make sense, though? Yeah, we had a great conversation about it. You just weren't here. That's okay. And then mid-band curled outside of the large triggers, so you said no trade. Gary, help me out here. I notice your checklist isn't on here. You still have 2 areas inside of favorable large triggers. You still have smalls below the large, and you do have a clear path. Ziba, it's rough being so popular, isn't it? Everybody wants to talk to you today. But don't let it change your approach, right? Sometimes life's going to happen. Sometimes you're not going to feel well. Gary, were your rules met? I'll tell you what, we won't even worry about your rules. We'll see if my rules were met. Odds favorable momentum. It's not perfect, but smalls outside a little. Not my best look, right? I have a clear path. Without question, I do have a clear path. So right now I do have a small issue. That's not my best. That's not my odds favorable momentum look. And now what do I see here? And I think this is the one, Gary, that gets you. Smalls inside, anything can happen, and divergence, right? So what am I looking at? I'm looking at not the best momentum, loss of momentum, visual loss of momentum. So for me, the midband doesn't have anything to do with it because trades come from fibs, midbands, or one-to-ones inside of favorable large triggers. What might give me a reason to pause is it's not my best look here, and it's certainly not my best look here, which means I'm probably not just going to jump in and hope that these weak triggers give me a huge push down off an area. Does that make sense? That's kind of how I see it. Everything's advantages, right? So a mid-band curling, I couldn't care less. The mid-band's going to curl every time price comes back to it, isn't it? Every time price pulls back to a mid-band's going to curl. Even on a high probability winner. And let's see if we can find Exhibit A. Mid-band curled, right? Coming through back here. Just every time you're going to see that little bit of a curl. Same way your synthetics will flatten out a little bit right at the point of impact. Joel, taking that rules not met. I love it. Indecision, indecision, indecision. Not willing to risk your money. I love it. Sit on those hands if you have to. And then, Gary, you've got to work through your buyer's remorse, right? Your seller's remorse. Because you didn't write anything on the chart, right? You're just showing me pictures, but what you're showing me is, dang it, market went down anyway and I could have made money. So Gary, if you have a clear path and you have weak triggers and you have a loss of momentum, once again, there's your market flow indication that lines up with the area that's likely to hold based on the trigger line location, based on every trigger line below. So rather than getting in early, there's your confirmation when your trigger line suggests that the market may continue down. Does that make sense? Love it. Things aren't right. Confirmation. And there it is right there. And it gets you in with room to manage back to that problem. It's just repetition, guys, over and over. And it can be frustrating sometimes because you are going to miss trades, right? The key is to get so comfortable that you don't miss trades. If you took the entry, Gary, there's a second higher divergence with weak triggers, and now the smalls are inside, and it's just ugly. And it's okay to let things be ugly without being in the market, guys. You don't have to be in the market every second of every day to be a successful trader. What you have to do is give yourself the advantages. And when the advantages are there, great things happen. When charts agree, great things happen. All right, guys, I'm going to take my second break. I'm going to go reload my water. Last hour, I like it to belong to you guys. If you've been sitting on the edge and you start to type, but you pull back because you just don't think that you should put a question in, put that question in. Guys, if you're brand new, put that question in. If you are old like me and been doing this a while, put that question in. There's always something to learn. There's always an aha moment, whether it is about termination conditions or whether it's about rethinking entries because advantages are going away, right? Put it in there. Let's talk about it. You guys make this class amazing with the questions that you ask. So continue to ask those questions. I'll be back in about 5. When I come back, we're going to finish strong. See you in a few, guys. All right, we are back. Last hour. I'm going to take a picture real quick. I just want to do some chart reading. This is what I see. Here I see weakened triggers, right? With a divergence, loss of momentum, and it pushes it higher. Sure enough. I see trigger lines staying weak with a second divergence, but it gives that little push, and now I'm seeing weak triggers with 3 divergences in the same price range. Guys, the market may crash 1,000 points. It may go up 1,000 points, but at this point, the only thing that I'm sure of is I don't have the advantage of momentum, and I'm losing that advantage even more on my smaller, faster chart, and I have no areas inside of favorable large triggers. So for me, I have to wait for things to agree again. For that high probability trend trade, I have to wait for things to agree again. That's what my rules say. Jose, slow link. I'm going to try clicking it again real quick. There we go. Jose 50-50 with odds favorable, no divergence, rock star entry, easy money. Great trade, Jose. Does everybody see it? 50-50, right? Smalls are through, large are not. Odds favorable, no divergence, tiny window of opportunity. Stop where the market shouldn't go. Money, money, right where the market is likely to go, where the market is likely to stop. Jose, I'm going to steal your picture. I hope that's okay. Michelle, you got it too? Nice job. Whoops. We're going to call this one Jose's Perfect. You know what? Let's do this. Mas mejor, high probability trend trade long. Aren't they, Michelle? So, Jose, let's compare this one to this one. Did one of them make you nervous more than the other? Did one feel more hopeful than the other? I'm telling you guys, it's hard, patience-wise. But if you just hang out and wait, it happens. It really does. 90% of the time you're reading indicators. George T. I sure do like it when you jump in every now and then, right? The prices on market flow are different, Jose. I'll look at them in just a second. Whoops. George T. from Tennessee. Everything says up, odds favorable, pivot stop out, perfect entry, money. Jose, you said your market flow prices look different? 6909, 6909. Those match. The placing. With respect to the large triggers are way down here. Oh. So in the other trade, oh yeah, it's on the wrong side of everything, isn't it? I got you. Yeah. You're on the wrong side of everything. You're no longer on the business end. Smalls above. Makes a difference. George, great trade. Gary, same one. Tried to take it on Sim. You didn't get filled. Tripping over pennies to save dollars, right? High point 68.88. That's the top of your window of opportunity. Mid-band is right in the middle. 1-to-1s are the bottom. No divergence, strong triggers from a pivot stop out. Everything says go. Catching that one up towards the top and willing to put the risk on it. Good stuff, guys. Nice trade. It's nice that that patience paid off. And was that crude oil earlier? What market was that? Oops. That was crude oil. Oh, there it is. Right there, right to a termination condition. Didn't work, right? What's that termination condition look like here? Pivot stop out, divergence, divergence, flat triggers. And then everything rolls. There's one of those little momentum styles with everything down. Rain, is that kind of the one you look for? I guess with the divergence, perhaps not, huh? But when everything starts to go down, if market flow's okay, all right. And I ask these questions, guys, because I love to know how you trade. I love to know how you think. I love to know your rules. And I'm not going to lie. Every time we talk about your rules, it makes me a better trader, especially if you've got conditions maybe outside of what I look for sometimes. It's selfish, but I'm using the class to make me a better trader as well. So what's happening now? We have a termination condition, creates a full reversal. We have odds favorable momentum. If I get a reversal bar, where is the bottom of my window of opportunity? Where's that market likely to continue from? Somewhere in between my lowest point of resistance inside of favorable large triggers to my highest point of resistance inside of favorable large triggers. Is everybody okay with that? We've put in the window of opportunity. We have the reversal bar. I know that if I'm filled at 68.76, that my stop has to go above 68.88, which means I'm looking at about 14 ticks of risk. Is everybody cool and clear with this? Termination creates a full reversal creates odds favorable to the clear path to the window of opportunity inside of favorable large triggers right until I reach a divergence low. And now I have to reassess because I've reached an area that may reverse the market. Gary, termination, full reversal. Not a termination yet, Gary. And we talked about this the other day. We'll talk about it again. Are you ready? And I enjoy the conversations. I really do. I enjoy the conversations over and over. So first I'm going to talk about what's the recipe for a termination condition. It's a two-part recipe. The first thing that happens is price reaches an area. Triggers don't break. Guys, this equals the termination condition. Everybody cool with that? Price reaches the area. Triggers don't break. It's a termination condition. So if price hasn't reached the area, I have odds favorable momentum. I have no termination conditions yet because price hasn't reached it. These are not termination conditions. Let's change the wording. These are targets. Does that make sense? Guys, if you're looking at areas that haven't been reached as termination conditions, you're going to stay out of trades. And let's go to the second half of this one. And this is a great lesson for newer users as well. Is my profit potential is not from the bottom of this bar. Gary, hopefully this helps. We haven't reached the area, right? Does that make sense? Price has to reach the area. When price reaches the area and the triggers don't break, then it's a termination condition. You have approximately 4 or 5 ticks to that potential termination condition, but price hasn't reached it. Therefore, the equation for termination hasn't even begun. But here's the other part of it. If you get a pullback, your entry is from 72. Your entry is from up here, which means that we're not gauging our distance. Absolutely, it's the price reaches. So your potential, if it pulled back and gave an entry, that's your potential, not that right there, because that's why we trade pullbacks. That's why we use the smaller chart. The idea is that we're trying to get to this area. So these aren't termination conditions. These become targets from up here. Does that make sense? Does that make sense to everybody? Termination conditions rely on price reaching the area. Okay means that it doesn't make sense, but you don't want me to talk anymore about it, typically. Price hasn't reached. Remember, we're using price bars before triggers. And it comes down. Price is reached. Triggers haven't broken. 52 is a textbook termination condition. Smalls break through, large have not. Now it's a 50-50 with the potential to break. And then we're only paying attention to that magenta line. When both the small and the large break through the area, then it becomes a clear path again. But everything starts when the price bar makes contact. And guys, this is a good drill to do just to become comfortable with termination conditions. The market's trending up, odds favorable, not a term at 11, not a term at 11, boom, price reaches, triggers don't break, 69.11 is a termination condition. Smalls make it through, large don't, it's a 50-50, and it ends up holding. Absolutely, Gary. So no triggers through, not broken, no clear path. Small and large triggers through, areas broken, we have a clear path. And then everybody's favorite, the 50-50, when the smalls break through with odds favorable momentum. And guys, when they break through, not when they eke right up against it, then it has the potential to break. Those small triggers barely made it, right? And what did it look like at that top? Divergence printed anyway. No reason to look for the long. And that becomes a termination condition that creates a full reversal. And it just isn't giving an opportunity there. And that's what's frustrating for people. Sometimes the market's going to move without you. Sometimes it's going to straight line. You have no control over that. The only thing you control is whether or not your rules are met. Guys, we're watching a fight right here. Weak triggers, multiple divergences. This market may not go up forever, but it's certainly having a hard time going down, isn't it? We don't have the advantage of momentum. We have a small chart termination, meaning 3 divergences in the same location. Did these two problems negate our clear path. Not so much, right? And it may ultimately go down again. Or it may just come back up and it may retest a mid-band or one-to-ones. We don't know. I have absolutely no idea. I'm not in charge. The only thing I'm in control of is whether or not I take advantages. Great picture, Gary. That was a good lesson. But remember, and guys, remember that lesson. And I think Bobby gave me a little indication the other day that he was thinking the same thing with triggers. Price reaches an area. And then if the triggers don't break, not the other way around, not reversed. So good lesson there. All right, guys, we're going to talk about your path. This is for you guys on day 1, day 2. This is for you guys that have had software for a while, but you're so darn smart you didn't want to participate. That was me. My hand is raised right now. I had such faith in my ability to do this on my own that I didn't participate in class. I didn't post pictures. I didn't use a spreadsheet. I certainly didn't ask for help because that was embarrassing, right? Guys, it cost me $5,000 in 2 days. There's no reason for you guys to do what I did. There's no reason for anybody to ever lose a sizable amount of money learning to trade the markets anymore. But it starts with, to minimize your learning curve, guys, post your pictures in class. Every trade, win, lose, or draw. Guys, I don't judge you on mistakes. I don't. If you win and the rules are wrong, you do get that short-term victory, but you're setting up for long-term failure. And how you know the difference? You need feedback, guys. I'm here 15 hours every week. I'm live every week. My email works every day of the week. Some of you have reached out via Skype. I always answer back. Guys, I'm available for you. I'm here to help. This is my whole job, is to teach you to read these indicators. If you place a trade on the simulator, you participate in class, there's no risk or loss of capital, guys. You can do this, learn the patterns with no risk. You need someone to tell you what you did right or wrong when you're new, and this really is part of the educational magic that we offer. Guys, I'm good at reading charts, great at reading indicators. I understand the rules that I teach, and my goal is to get you to that point of understanding. Use this outline for education. It's that same one we talked about. Post in the room. Use the spreadsheet. Know when it's okay to trade. Practice the right trades. Simplify. And practice until they become easy. Populate your spreadsheet with the trades using the checklist, right? Those advantages clearly defined out. Post the trades in the class with your entries and exits along with the rules annotated. Copy pasted. Guys, here's one. If you use Snagit, you can literally take a checklist and pop it right on there. If you're not using Snagit, if you use Capture, you can still annotate a chart with your rules. Tell me what you did, how you felt. Study historical chart setups, guys. Go back on that spreadsheet. Look at all 160 of them. Use pictures generated in class. When Jose and who else? And George, when everybody posted that high probability of that 50-50 trend trade winner, steal it. Put it in your spreadsheet. Grab them from the Discord channels. Create 15 images a day, guys. That's 300 images a month. At 300 images a month, that is 900 by the time you get to the end of a 90-day study. And every time you upload to Screencast, it goes into this. I've only got 440. But I had 7,000 before my computer died and I swapped over to a new one. John Novak sits somewhere around 30,000 right now. Present the pictures in class annotated with your checklist. 15 hours a week, you'll receive feedback on your ability to follow your rules. Tell me your rules. I'll help you follow them. I'll keep you accountable. Insert your trades that follow the rules into your spreadsheet. They must be studied and memorized. until executing the correct trade becomes second nature once again. Here's that picture. Guys, populate your spreadsheet. Come on, picture. Here, I'll show you what the picture is. Populate your spreadsheet with rules met trades. Define your management plan. Guys, after you develop your entries, after you have a plan for entries, you're going to define your management plan. And initially, a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. And you can alter your plan when you're done with the education, when you read charts better, when you understand these nuances more and more. So we've talked about the best entries. So now I'm going to show you the most mechanical plan. Everything is if-then. It removes opinion. It's focused on quick targets, quick profits, and minimizing risk, guys. If you trade 2 contracts, the initial stop will be 12 ticks, adjusted above or below the window of opportunity, that place where the market shouldn't go. Here's your great entry. Here's your initial stop. And that stop will be moved 2 ticks above or below the reversal bar in the direction of the trade. So once that market begins to move in the direction of the trade, you're going to reduce risk. You're going to go from outside the window of opportunity to a couple ticks above. Because at this point, the market had momentum, a clear path, and it had begun to move from that area inside of favorable large triggers. And there's nothing to do now. Remember, this is pragmatic, this is emotionless, this is mechanical. You're either stopped out of the trade or your target gets hit. And guys, I can tell you, if you're terrified to lose fake money, you're going to be petrified when you go live. So get in the habit. It's okay to get stopped out. Learn to accept it. The first profit target is $100, at which point the stop moves to break even. Guys, if you reach $100, and if you're following the rules, you're going to reach $100 more often than you don't. Your stop is break even. You have a dopamine kick. Yes, I made money. It's in the bank. They can't take it from me. And now I have absolutely nothing to lose. So either your second target is hit or you're stopped out break even. And if you're stopped out break even, you still made $100, which is pretty cool for a few seconds of your life. Nothing to do now, right? It's up to the market gods. It either hits your target or you're stopped out. And if it hits your target, guys, that's a $300 winner. That's 2 contracts, 100 at the first, 200 at the second. It's mechanical, it's opinionless. And allow yourself 30 to 90 days to practice the mechanical approach to a checklist-based entry and a $100, $200 automated exit. You can adjust your targets based on the experience later. Guys, I can tell you that the checklist came from a private session with a client that was chasing everything. The mechanical approach came from a session with a client that refused to exit trades when the conditions changed. Both of these were developed for brand new users to take a little bit of the emotion and the fear out of trading so that you can keep it mechanical. And then guys, once you've gotten through this 30 to 90 days, you've simulated, you're feeling good, you're taking winners, you're nailing exits, you're getting comfortable with your management. I think it's funny that it says this, but accept that you may be a less capable trader than you initially believed your first time out. I refuse to believe that. $5,000 in 2 days. Everyone feels entitled to win. I felt entitled to win. This is the Mark Novak story. My last name was Novak. You're darn right I was going to win, right? I didn't have to study. I didn't have to participate. I didn't have to take pictures or write rules. So before risking your capital, guys, test your trading plan using a prop firm. I'm not telling you which prop firm to use, but I'm telling you that there's 4 of them on the Nexgen homepage, and I believe each and every one of them provides some sort of discount to Nexgen users. And Apex runs sales all the time, and for less than $200, you can trade up to $50,000 worth of capital, guys. It's a recurring monthly charge. And right now, I think they still have it. It was 90% off. I'm controlling $50,000 for $36 a month right now. The best part is you keep the first 25 grand and 90% after that. If you make $3,000 profit before a $2,500 loss on that $50,000 account, Apex will give you the $50,000 to trade live. You've passed their test. They're going to fund you. You can add up to 19 more funded accounts if you wish. 20 $50,000 accounts is $1 million that you can control. It's like trading $900,000 of your hard-earned capital with only $100 of exposure. Starting out, use their money. You'll thank us later when you realize what you do not know yet about yourself. Everybody reacts differently the first time they go live, guys. And then when you can make money in a real-world setting with someone else's money, trade your own money with their funded accounts, right? Remember, there is no penalty for being cautious when you start trading live. The actual harm comes from thinking you are a better trader than you are and blowing out a large sum of your capital. Zeba, there is absolutely, so Rain, there's a good one. Earn max, $500,000 for $54 a month, $20 resets. That's amazing. And that's why I'm saying, I'm not saying go to Apex. I'm just saying use somebody else's money. Safia, or use both, right? Safia, I'm not 100% sure, to be honest with you. Once you're paid, I'm not sure if there's a trailing. My guess would be yes. $350,000 accounts for 40. So guys, they're out there, right? Zeba, it's a monthly recurring charge, which means that every month you're going to get charged $167 a month to control that 50,000. You have 7 days minimum to qualify. So if you qualify on day one, you have to not lose for 7 days, right? There are trailing drawdowns, guys. There's rules. Make sure you read the rules. Gary, termination conditions everywhere. Trigger lines go through, not looking for the HVA. No, you don't, Zeba. You have to make $3,000 without hitting your $2,500 drawdown. You have to trade for 7 days. So you can make it in 7 days, or you can make it in 70 days. But every 30 days, they're going to charge you that monthly fee. When I was moving across the country, I had an Apex account that I didn't touch for 30 days. And they charged me the recurring, but it was still the same account. So, guys, there's options out there. But the key about Apex from their website, so go to, Zeba, do me a favor. Go to the Nexgen webpage on education, and that'll give you links to 4 different options to read. If you scroll down just a little bit, Apex, then Earn Max, Elite, Top Step. Yeah, Jose, I like to get people in from the homepage because it automatically creates a discount for you if they don't have a sale. But guys, that's the key. Did you know that most traders stop trading because they blow out accounts, because they trade before they're ready? You can avoid that now. Guys, you can practice. No, you a minimum of 7 days, Safia. So you can't come in and make $3 grand in a day and get funded that day because they want consistency, right? They want to see you trade. They want to see you making money, and they want to see you not making, you can do 100 a day, absolutely. They want to see that you can make money consistently without blowing out accounts. And they also want to see when you're funded that if you make $1,000 in a day, that's it. You start on Zeba, you pass their test, and then they fund you, and then you're live. But if you make $1,000 in a day, Safia, what they really want to see is they want to see you make $300 3 times, right? And $100. They don't want to see you lose $1,000 and then have one $2,000 trades to erase it. They want to see consistency. Why would they do what, Zeba? I'm sorry. I had that. that vocal going. Why would they trade you lot? Give you this option? Because they make money. They take 10% of everything you make. So Ziba, if you're making $100,000 a year with their software, they're making $10,000 a year just off of you. Their hope is to take 5,000 people making $100,000 a year with their prop firm. You can. They'll shut you down. That's why they make you prove it first. You can lose their money. That's why they make you prove that you're capable first, right? That's why if you're on a $50,000 account, you have to make $3,000 before you lose $2,500. If you're on a $25,000, you have to make $1,500 before you lose $1,500. If you want to do a $300,000 account, you have to make $20,000 before you lose it. So they're making you prove that you're capable before they ever think about. That's it. And if you lose $2,500 on a $50,000 account, you're busted. You're out. You have to reset and start over. But what it does, Eva, is it lets you test your plan without investing all of your money into the market to do it. And if you ask everybody in this room, everybody listening right now, show of hands, who wishes the first time they lost a bunch of money in the market, they were on Apex instead of out of their own bank account? I wish I would have. I wish there would have been something like this. Everybody, right? And guys, that's why this is such a great option. Don't become a statistic, because if you don't pass, just hypothetically, if you don't pass, it's okay. Ziba, you'd have to talk to them on the whys they do it. Yeah, I don't know. I've never spoken with them. But for me, let's just say if I have 100 people that have proven to me that they can trade consistently and confidently and make money more than they lose it, and I fund those 100 people, chances are 80 of them are going to make me money and 20 of them are going to blow themselves out of the water. So I keep their risk losses low. I may lose 10 grand total, but I stand to make hundreds of thousands based on the ones that are consistent, right? So it's a risk to reward. So guys, this is a great option. You don't have to be a statistic, right? You can go through something like Apex. You can go through like EarnMax. And you can test your plan. You know, this is what I'm going to do. This is how I'm going to manage it. Shoot, I'm going to go see if it works. I'm going to see if I can follow it. That's what typically happens. I know this works. I know my entries are good. I know it wins more than it loses. Am I capable of following my plan? And guys, I'm not going to lie. Some days, I'm not. I have bad days like everybody else. You're going to have bad days. But if I do this and I fail, I don't even like to call it fail. If I don't qualify the first time, guys, my job is to give everything that I've done on my quest into this classroom and have a conversation. Hey, Jose, do you notice that you didn't have momentum? Hey, Ziba, you traded into a termination condition. Hey, Bobby T, you fought the trend, right? And we have these conversations and you have these realizations. And eventually, you weed out the noise that becomes problematic for you and you really get into that focus of consistency. It starts with the classroom. It starts with your pictures. It starts with putting yourself in a position to be successful. And then, guys, I can't stress this enough. Or it could also go higher, Gary. And they do. They teach you. George, I couldn't have said it better. They teach you some self-control by trading with some limits until it becomes habitual. Gary, it could also go all the way up to 1,000, right? My most expensive accessory is opinion. Well, it could go lower. Well, it could go higher. The only thing I'm sure of is it's going to push to the right. I don't have the advantage of momentum, nor do I have the advantage of a clear path. All of my trigger lines are down. And if you're waiting on the HVA, Gary, those trigger lines are already through. That's not your best look. Best look is when the trigger lines stay on the business side of support. So don't ever try to predict, guys. Predictions cost you money. Opinions cost you money. Just wait. If you keep it simple, right? Two options for me. Rules met, rules not met. Everything else is opinion, and opinion kicks my butt 90% of the time. And you're guaranteed the trade will come. You just have to wait. 90%, right? Wasn't that the arbitrary number that we made up? 90% of what you do during the day is going to be chart reading. 10% will be trading. Somebody told me once it was more like 99%. Guys, we're professional waiters. And that's what we do. Wait for advantages. Crude isn't offering any. What's the ES doing? The ES isn't offering any. So if I don't have advantages, guys, my job is to go make a sandwich, right? Do anything other than trade. I think I'm going to get these made just to remind me. The Nexgen, what's it going to take to get me in a trade coffee mug? Wouldn't that be awesome? I was playing on Vistaprint. I was like, how cool would that be? Sitting there sipping your coffee, you're like, oh, I think I have a trade. No, wait. Let me check my checklist. Oh, the advantages aren't there. I don't have a trade. That's what my brain does when there's not trades. I go do something else. Guys, I've got a sketchbook on my desk, and I draw. If the rules aren't met, I do anything other than trade. I draw. I'll play a golf game on my phone. I'll Skype back and forth with John Novak, and we'll talk about how our rules aren't met. And even better, he'll send me adorable pictures of his puppies and their new puppy. That's the newest Novak, guys. That's Ellie. She is freaking adorable. Now I have to go to Sarasota to see her. But sometimes it's better just to take a picture of your puppy rather than try to create a trade, right? Guys, we got about 10 minutes. What do you want to talk about? Because the market's not providing statistical advantages, which means that I'm not willing to pull the trigger. What do you think? Marshall, how you feeling? Does it click more today than it did earlier in the week, last week? Starting to come together, starting to make sense? And I know you've got experience, so you probably have things to unlearn, right? Harder to keep it simple. But it can be. A lot of you guys are in here. MD77, David AZ, Stu. A lot of people are in here and not really saying anything. Maybe you don't need me. Maybe you just like the sound of my voice. It's weird, but that's cool. But don't feel like you can't. Yeah, you'll get there. So Marshall, try to learn the rules. Then they become easier to follow. Make sure that you're really comfortable with what you're looking for, right? Make sure you know exactly what it looks like. And man, go back. People hate work. Go back and study it. Scroll back and look for that odds favorable. I'm still learning, Gary. Look for that odds favorable. Look for that no termination. Look for those tails. circle some tails, and see if there was money to be made. See if there were rules-based entries. Guys, until you trust your rules wholeheartedly, you're still moving. John told me once, he goes, how long does it take to really trust? And then he says 3,000 repetitions, guys. 3,000 repetitions until it becomes intuitive. The reality is, though, and this is true, and I know this to be true because I watch it all the time, if you allow that mechanical approach on entries, that mechanical approach on exits to be your path for the first 20 days, you're going to understand how to read your charts in the most basic form, that most foundational approach. You will understand fluently where the market is likely to continue, likely to stop, and likely to go. The idea is to build that foundation that's capable of winning consistently, right? Learning to take that trade that wins more than it loses, and then you expand your knowledge base through repetition. Guys, the checklist is provided, right? This checklist tells you exactly what you need to get into the market, exactly what you need. And most new users will embrace this like family. And right about 30 days, you're going to learn how to read your charts, and you're going to abandon everything that made you successful because you're going to start to see patterns, and you're going to start to trade what you see rather than what your rules say. I'm giving you a heads up right now. When I was training managers, we called this the 30-day stupid. I could give anybody on God's green earth a checklist and make them look like the most brilliant person in the world. And when they follow the checklist, they are. But human nature says that once we start to feel smart, we abandon what makes us successful because it's not habit yet. That muscle memory is not there. Everybody I've ever met that's traded the markets has done this. They go from high probability trend trades to saying, well, all my trigger lines are below this area of resistance. This area of resistance is guaranteed to win to the downside. And then sure enough, the market goes up because their rules weren't met. So that's it, guys. That's where we're at. Let me give you a little insight on picture taking. This will be the last thing we talk about. This is my conversation with John Novak. Every morning we talk for an hour or two. I could scroll for days on pictures that he posts that we talk about, patterns that we look at every day, advantages, disadvantages. I'm in a constant state of trying to be better, trying to find advantages, trying to find patterns that create advantages. The more pictures you take, guys, the more you annotate, the quicker you're going to get there. Without question, hands down. So and then one more. Oh my gosh, look at that thing. And the Doberman's not eating it. That's what makes me happy. Yep, I'll be in Sarasota soon. Gotta go see that dog. Guys, that's it for me today. We appear to be at an impasse in the market.